Hi, welcome to my monthly portfolio update. As usual, I hope you'll find this information useful, but disclaimer, please note that this is not investing advice. It's just my portfolio as it stands on Wednesday, March 1st, and it can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So, please be careful since it's your responsibility to do your own research before investing. Now let's get into it. This month I continued my dollar cost averaging strategy for buying US tech stocks, a smaller percentage, and also added the two indexes that I own, the S&P 500 and the Romanian main stock exchange index, the BET. One observation, since my broker Tradeville charges a minimal commission when I buy a small amount, like one unit of each index, I actually pay a few bucks more, which is not a lot, but for buying one share it starts to add up quite a bit. So it's not really the market price. But anyways, that's the cost of doing business. This month I also slightly increased the defensive new entries, the real estate company that I added on the watch list last month, One United, the agricultural company DN Agrar, and the defense position Lockheed Martin. I didn't sell anything this month. However, there is a big news, and that is that I decided to add a new entry to my investment punch card, the Warren Buffett concept that it's not about quantity of investments, but about quality and holding investments for a very long time. So I added Microsoft as my second entry. You might believe that this is related to the ChatGPT buzz that is going around, but surprisingly, it's actually because, first and foremost, it's a company I like for a while and has a captive audience of big customers, but it's not a monopoly, wink wink, and has proved to be able to keep and grow customers and upsell other products over the long term. Secondly, I like that their Asia cloud computing segment is still growing 18% versus Q2 2022, and it will show hefty profits for a long time. And thirdly, and most importantly, the Bill and Melinda Gates Foundation Trust added $9 billion in Microsoft stocks, which at least shows me that they believe in the long-term prospects. First, use of the punch card was late last year when I bought Simtel, the Romanian renewable energy company. You can see the September 2022 video for more details about the company when I first added it to my watch list, and the October 2022 when it became my first ever punch card entry. And now, in February 2023, Microsoft is my second one, and I think, hope, is the last one for the year. In terms of new funds, this month I received only a small cash coupon from my renewable electric company, Restart Energy 1 bond, that I get twice a year, but really nothing to write home about, although cash flow is always appreciated here. Also, got a quote on bad news, let's call it, my bank investment, which is BRD Group Societe Generale, even though it had great profits last year, won't propose a dividend this year because it wants to respect the Romanian Central Bank's indication that tough times are ahead and they need liquidity. Now, that is a little bit of BS, but it is what it is. It looks like there is no dividend this year unless the main shareholder, the French bank Societe Generale, doesn't decide to vote to add a dividend distribution to the meeting. But right now this seems unlikely, you never know. Anyways, this is my portfolio as it stands on March 1st. Overall, the actively managed portfolio is up 0.72% since last month, which is not great. However, this is the actual first time in a long time when my actively managed portfolio is actually becoming positive. It's only 0.02%, but it is positive. Now, remember that the full pyramid portfolio that I talk about was positive for most of 2022. However, it's good to know that actually the actively managed portfolio is also positive. Speaking about the pyramid portfolio, the allocation pyramid is as follows on March 1st. You can see the 1% increase, 1.5% increase in value stocks, and this was driven mostly by Romanian assets, which reported excellent preliminary results for 2022, and the decrease in growth stocks, that includes the tech stocks that I'm dollar cost averaging, and it went down due to the new PCE report, which tends to imply that the Fed will move more aggressively this month when increasing rates by maybe 50 basis points. Also, unfortunately for me, China is down again since last month due to the increased tensions with the US. You all remember the balloon, the Russia arms accusation, and overall the US not liking them too much at the moment. You can see the small decrease in commodities, which actually I didn't buy or sell anything, it's a small fluctuation, and also cash, which again I used for dollar cost averaging. If you found this information useful so far, please don't forget to like and subscribe. It really helps getting this out to more people. Also, if you have any questions or advice, please let me know down in the comments. I'll try to respond to every one of it. Now, let's talk about today's bonus topic, reflexivity theory and influencers. We all know that when an event happens, it influences asset prices, sometimes positively, sometimes negatively, and that's why we're addicted to watching or reading the news from Bloomberg, CNBC, Barron's, etc. But how do analysts know how much that event was already priced in the asset? The truth is they don't know, since the market works a little bit differently. When an event happens, it actually influences investor psychology, sometimes more or sometimes less than it actually should, which in turn influences the asset prices. One of the biggest mistakes we see in media is believing that changes in prices are the result of events, instead of how events stack against investors' expectations. No one can definitely say what investors as a group already anticipated in terms of CPI, GDP, foreign policy, the results reported by company X, the results reported by the company's main competitor, etc. There is a famous parable that I mentioned before that shows that nobody really knows, and we grasp at straws for reasons when something happens. So it goes something like this. When the US invaded Iraq in the 90s, at 1 p.m. the ticker showed markets down due to investors concerned about the war in Iraq and its future effects on the economy. And then, 1 minute later, it says markets up due to investors' positive reaction to a potential favorable end to the war. Now, were the pundits right the first time or the second time? The answer is neither. They just saw the market going down and looked for a reason why it did so, and the war was obvious. Then they saw the market went up and found the reasons why it did that as well, which, funny enough, was also the war. This brings me to George Soros' theory of reflexivity, which states that the actions of market participants change the market. Nothing in a market always continues independent and unchanged. A market is nothing more than the people in it and the decisions they make, and the behavior of those people shapes the market. When people invest more in certain stocks than others, the prices of those stocks rise in relative terms. And when everyone decides to refrain from performing the functions of analysis, price discovery, and capital allocation, the appropriateness of market prices can go out the window. Now, love him or hate him, and you have plenty of reasons for both, Soros is one of the great investors that ever lived, the man who broke the Bank of England, and was one of the first to understand that market price is more influenced by investor psychology than actual fundamentals, contradicting the efficient market hypothesis, and the investor psychology can stay irrational for a long time, but it will eventually go back to the correct price in the long run. Now, Howard Marks, another Titanic investor, compared investor psychology to a pendulum that swings too much from the center, the fundamental value of an asset, to either the right, too much positivity, nothing can go wrong, things will go well forever, or to the left, too much negative, nothing will be okay ever again. And, of course, both are wrong. A good investor should understand what they own, why they own it, and keep out of the whirlwind of short-term news, opinions, and basically white noise. It's sometimes fun, but it's not helpful at all. To bring everything back on how this relates to influencers, either big-time investors or journalists or even YouTube creators, they all have an inherent conflict of interest when they give an opinion. If someone says they bought or recommend asset A because they believe it will go up due to reasons X, Y, and Z, there can be two main situations. Option A, they actually already bought the asset and they're trying to influence others to see things their way and pile into the asset, which will drive the asset price up so they could sell at a profit later. Makes sense. B, they are actually lying about it and didn't buy it or don't believe in it, and maybe they get a commission or clicks or views or whatever. And of course, lying is never good for the person that follows the advice. The funny thing that we want the influencers involved to have skin in the game instead of being just professional guessers with nothing to gain or lose if they are right or wrong, because that really means nothing. They will just come up with something new next week, next month, next year, etc. So, when you see someone giving their opinion, always remember George Soros' reflexivity theory and how that might affect the stock. People sometimes ask why I have such a long disclaimer, probably 3 times longer than anyone else at the beginning of the videos, and suggest to shorten it up since I lose some viewers in the age of short attention span. And they are right. But now you know why that is. I apologize for it, and I understand that it can become repetitive, especially if you watch a bunch of videos in a row. Now, I hope you liked this video. If you did, please don't forget to like and subscribe, and talk to you next month. Bye.